We have Prateek Pant, who is joining us now from WhiteOak Capital to talk more about flows, markets, etc. Prateek, thank you very much for your time. First of all, I'd like to understand what is your house view on the Indian markets? Looking at the earnings, the way almost 75% of the index weight earnings are out, looking at valuations and the situation on flows, because you guys operate at a global level as well, so keep a keen eye on flows. How are these three variables looking for India?
Sure. So thanks, Ajay. Yeah, it's a good day to be talking right now. Where markets are showing elevated levels, and I think the market has always been finally at some point of time the actual earnings in the market starts catching up, right? So broadly, the economy had been holding up, and now that has started getting reflected in the earnings data which is coming up, and also simultaneously started reflecting in the prices. The results so far which have come out have been in line with expectations. We are expecting roughly about a 12% growth in EPS for Nifty for this particular year, this financial year. Which is fairly healthy, and across sectors, right? Most of the sectors you have seen fairly strong pickup. So I guess just for the lack of any negative surprises, and for the fact that India continues to be an outlier in the global, otherwise uncertain macroeconomics. We seem to be getting a lot more share of flows which are coming in right now. The true flows will actually be still linked to what happens from a Fed policy perspective. Although there has been indications that we may be very close to the peak of the interest rate cycle out there. And that can start now building in some level of appetite for emerging markets and for India. We still have a little bit of catch up which has to be done. Broadly, India and the larger emerging market pack actually was underperforming the developed markets. The last 1 week's, of course, rallies making this now more in line in terms of the both emerging markets as well as the developed markets. So flows continue to flows have been good in India. And but the actual, as you say, tsunami will come as people get a lot more directionally comfortable with what Fed is actually going to do out there. Having said that, we continue to see strong outlook even in this particular year across sectors, whether it's consumer, whether it's industrials with revival of some amount of capex, and of course banking and financial services, which is pretty much leading the pack right now.
Prateek, I understand that you have, in association with Ashoka, launched Ashoka WhiteOak Emerging Market Trust also in the main market on London Stock Exchange. Talk to us what kind of communication or talks you're having with your overseas investors regarding India. What's the hypothesis you are actually telling them due to which they are participating here for 3 to 5 year kind of view?
Sure. So Ashoka India is actually a part of the WhiteOak structure itself, which we launched last week on the main bourse of London Stock Exchange, and that has given us an opportunity to reach out to a lot of global investors who've been looking at India. As I reiterate, right, today India seems to be very strongly poised in terms of all three aspects, right? The large consumer diaspora, which is leading to growth in the consumer side, some level of revival, which is there on the capex side, and that is giving the order books across industrials are very, very strong. And then finally, the cleanup which happened of on the banking and financial sector is now finding its manifestation in the type of earnings which is coming out from the private banking sector. So across these areas, right, whether it is consumption, whether it's capital growth, whether it's the health of the financial sector, we are a fairly uniquely poised emerging market, and that's where many investors globally are also seeing this play out not just as a 1 year, 2 year phenomena, but more as a decadal opportunity, right? So those are, I think, very positive observations which are actually coming for the capital markets and the growth of the markets out here in India.
Fair point. So how does the trajectory look if one were to take a fresh call? If an overseas investor is listening to our interaction right now and wants to take a 3 to 5 year kind of a view, the way you guys at WhiteOak operate your portfolios, a mix of small, mid, large. I mean, kind of a hybrid kind of a portfolio. Are you getting comfortable feeling about the earnings trajectory? Because eventually returns will mirror the earnings of corporate India. 3 to 5 year view.
Sure. Sure. So, when I look at, normally while I may talk to you about broad sectors and market and economy, the way we construct our portfolio is all bottom up, right? For us, we believe that the true source of alpha or outperformance is actually coming in through bottom up stock selection. So across these sectors, again, what we've seen is that there has been a little bit of underperformance on the small and mid cap size in the last few years, last 2 to 3 years specifically. And I think there's a big opportunity which is there in actually looking at some good names within the small and mid cap side. In the last couple of years itself, you've seen a listing of companies from the unorganized to the organized, right? You've had an Indian ethnic wear company get listed. You've seen listing in the diagnostic spaces. You've seen a lot of listings in the insurance space. Many of these sectors are really very new sectors in India from a listing perspective. And these are your small and mid cap, which are actually going to become large caps or multi-baggers over the next decade or 2 decades. So if you have to really create that level of outperformance to markets, and if market anyway is looking good, our portfolios do tend to be overweight on small and mid cap sector. Look at, as I said, good companies today, which represent the consumer diaspora, which is representing opportunities on the financial sector. And also, of course, the Build India theme, which is happening through the capital good and infrastructure space. So I guess, Ajay, I would say that, all around there are some great opportunities, and more so in the small and mid cap space as we look at constructing these portfolios bottom up.
Also, a view on how are you interacting with your distributors across the country, because we are seeing a surge of new investors also. HNIs want to allocate more to the stock markets compared to land and gold, which there was the historic favorites. And the SIP number is only getting stronger by the day. Do you see that trend continue? Give us some insight, because you guys are interacting with a lot of people across the length and breadth of the country.
Sure. I mean, I've literally lived out of a suitcase in the last 1 year as we set up some 50 odd branches in the last year, and we've been interacting, of course, with investors right from the smallest locations to the large locations. And clearly, the trend towards financialization of financial savings is on the upswing. This 5-6% traditional penetration, which used to be there in this 40 lakh crore mutual fund market, we wouldn't be surprised if this more than doubles over the next 5 years. With the healthy trend around savings, which seems to be coming in. And the distribution partners have actually played an amazing role in creating that level of culture of savings which are there. We see a lot more distributors engaged in understanding financial health of their investors, their objectives, as these type of portfolios are getting constructed. We've had a sort of a lull period over the 18 months, but if we get into a phase right now where overall, different asset classes, including both fixed income and equity, show a positive trajectory, I'm sure you will find a lot more investors showing interest in this. SIP, of course, has been a great story to support while the FII inflows had petered down, but the markets were held quite well by the 14,000 crores of SIP book. I also see the next phase, where the systematic withdrawal plan, or people who've created wealth starting to withdraw a little bit from a consumption perspective, and both a combination of SIPs and SWPs is going to lead to the next big phase within the asset management industry and the investment pool in general.
Right. All right, Prateek. We'll let you go on that one. Thanks so much for joining us on the show today.
Thank you. Thanks a lot.
That was